Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in corporate filings and spill the tea on what it all means for the companies we watch and invest in. Today we're diving into Medicus Pharma Limited, and let me tell you they've got some interesting deals cooking that smell like a big gamble or a potential home run depending on how you look at it. So Medicus Pharma Limited filed this report on the 5th of December 2025, and it's all about giving their existing warrants a little nudge to get exercised, and in return they are issuing new warrants. Think of it like this, they are offering a discount to people who already hold tickets to buy their stock, but with a little sweetener added on top. Basically, they've made an agreement with a big investor to get them to use their old warrants to buy shares. Now, these old warrants are for about 2.6 million shares, and the company is letting the investor buy them at a slightly lower price, $1.92 per share instead of the original price. But here is the kicker, the investor in exchange for exercising these old warrants gets brand new warrants that can be used to buy even more shares. These new warrants are a bit different. They are for over 4 million shares and they have an exercise price of $2 per share. They also have a lifespan until June of 2031. Now, one of these new warrant series has a special condition. If the company's stock price stays above $10 for 10 trading days, the company can actually force the investor to exercise these warrants. This is a pretty neat trick to get more cash into the company's coffers when things are going well. So what does this mean in plain English? Medicus Pharma expects to get around $5.1 million just from the investor exercising their old warrants. This is money they can use to fund their operations or whatever else they have planned. It is a smart way to get cash without having to issue more stock through a public offering right away. Now let's look at some more recent activity. They also have a table here detailing sales of their common shares to someone named Yorkville under something called a standby equity purchase agreement. This is basically a deal where Yorkville has agreed to buy shares from Medicus Pharma when the company needs it. Let's check out some of these recent transactions. On the 28th of October, they sold 250,000 shares for about $2.37 each, bringing in over $594,000. Then on the 5th of November, they had a couple of sales, 83,333 shares at $2.26, and another smaller batch of 14,659 shares at $2.18. It looks like they are making these sales fairly regularly. Later in November, they sold more shares on the 14th, again in two tranches, 83,375 shares at $2.23 and 4,526 shares at an even slightly lower price of $2.23. They then sold another 33,333 shares at $2.34 and 31,667 shares at $2.27. Just a few days later on the 20th, towards the end of November on the 28th, they sold 66,667 shares at $1.94 and another 33,333 shares at $1.94. It's interesting to see the price fluctuating a bit, but they are consistently bringing in cash from these sales. And most recently, on the 4th of December, they sold 33,333 shares at $1.95 and 46,667 shares at $1.69. So over this period, they raked in a total of about $1.5 million from these Yorkville sales. Looking at this table, the total amount raised from these specific sales is about $1.5 million. This is cash from Yorkville buying shares based on the company's request. This indicates the company is actively drawing on this standby agreement to get funding. Now let's step back and look at the bigger picture. Medicus Pharma is clearly in a phase where they need capital to fuel their growth or operations, and they are using a combination of warrant incentives and standby equity agreements to get it. The warrant inducement is a clever way to encourage existing warrant holders to exercise their options, now which brings in immediate cash, and indirectly, they get new warrants as a sort of incentive or a way to extend their future investment. They are also promising to make sure that the shares issued from these new warrants can be legally sold by the investors. This means they'll file a registration statement with the SEC. They aim to get this done within 60 days. This shows they are committed to transparency and allowing for future liquidity for these securities. So what is my take on this? Medicus Pharma is leveraging financial instruments to secure funding. This isn't unusual for pharma companies, especially those in development or early stages. The risks here are pretty clear. If their stock price doesn't perform well, the new warrants might not be exercised and the money they hope to get from those could evaporate. Also, issuing more shares through these agreements can dilute the ownership stake of existing shareholders. The strategy of offering incentives for warrant exercise is a fairly standard but effective tactic. The key will be whether Medicus Pharma can translate this funding into tangible progress, whether that is advancing drug candidates or expanding market reach. The dual-prong approach of the inducement agreement and the standby equity purchase agreement shows a proactive approach to capital management. One is about immediate cash flow from existing commitments, and the other is about securing a potential future funding lifeline. Ultimately, this filing tells us Medicus Pharma is actively managing its capital structure. They are generating cash from a mix of warrant exercises and equity sales. The success of these strategies will hinge on the company's ability to execute its business plan and improve its stock performance to make these warrants valuable for the holders, and ultimately for the company as well. Alright, that is our breakdown of Medicus Pharma's latest filing. What do you think about their capital raising strategies? Are they smart moves or a sign of desperation? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button. It really helps us out, and subscribe for more deep dives into the financials of the companies you care about. And don't forget to join our Discord community, linked in the description for more insights and discussions. Thanks for watching. See you next time.